Back on Morning Movers with a look at Tesla. Shares under a little bit of pressure in the pre-market, but it saw September registrations increase in France and Denmark for the first time this year, according to Reuters. Registrations in Denmark rose over 20%, while those in France increased almost 3%. Tesla also announced it's raising the lease prices for all of its vehicles after the expiration of a U.S. electrical vehicle credits, with the Model 3 being increased to $759 from $429. Time now for Options Corner. Joining us to take a deeper look at Tesla is Rick Ducat, lead market technician. All right, listen, Tesla had a strong September, and it's just a very different place than where it was earlier this year when it still had yet to catch up with the rest of the Mag 7. So what trends do you notice in this chart, Rick?
Yes, very true. And, I wanted to look at Tesla versus the legacy automakers here. You see handily outperforming General Motors, Ford, Toyota, as well as Stellantis here. And when you also look at it versus the Chinese EV makers and its other American electrical EV counterparts here, it's still near the top of the pack. XPeng is outperforming here. Then we also have Rivian, NIO, and Lucid here. But the Ford CEO the other day commented that the Chinese EV players are the dominant power in the field, the 700-pound gorilla in the room, so Tesla could face some stiff competition. If we were to look at our chart, though, 463 was our old high close area back here. That would be one upside area to watch out for. To the downside, though, about 440. That was another high point here that we have crossed above and held on beyond that point here, so that could be a supportive area going forward. We had our big push to the upside. We've transitioned into more of a channel type shape here, somewhat slower momentum here as the price consolidates somewhat. RSI trending downward, but remained in the overbought area as well. So still a bit of a mixed picture here. We're seeing bearish divergence, declining momentum, but rising prices here. If we were to look at volume profile and standard deviation channels, we can see our volume profile node is around our 426 level. That was another stopping point for price that frequently occurred here, but we're hanging on above that point. Volume really starts to thin out. Notice then that our +2 standard deviation channel comes in near 467, right around those old highs near 463 that I had mentioned as well. Finally, if we look at our expected move for the October 17th option series here, we can see that 395 would be the downward threshold here. That lines up with some of our technical indicators as well. To the upside, 490, pretty close to those all-time highs as well. So some things to consider. 10.7% move potentially in only 16 days.
Okay. All right. Great insight there. Thank you, Rick. That's Rick Ducat, the Duke of Data himself. Now take us through an example trade. We've got Tom Whitecoast, Fast Market and senior options contributor. All right, Tom, what's the approach for an example trade now for Tesla?
Well, maybe passive directionally here, just due to the fact that the stock did rally 33% in September. It's bounced off of those April lows pretty significantly also. Now, trying to aim for those all-time highs that we saw at the end of December. But I looked at this from the perspective of it's overbought. The RSI was settled at about the 70 level yesterday, so it's overbought on a technical level. But maybe you don't want to be aggressive and do something bearish. So I looked at a neutral to bearish passive type of strategy here that expires in a couple weeks. So it's a shorter time frame here. So went out to the October 17th monthly options. So about 16 days till expiration, just over 2 weeks. We're going to sell an out of the money 470 strike call. And then against it, to make it risk defined, the stock has the potential to move. We want to buy the 490 strike call. So a short $20 wide, neutral to bearish call vertical. You're going to collect roughly, if the stock opens up right here about 443, 444, you're going to collect a credit of about $4.50. That's what you can profit on this type of strategy, $450 per spread. Now, you've got risk on this one, and that's above the 490 strike of about just over $1,500. So the risk reward setup isn't that great, but these are one of those trade-offs that we talk about in passive type strategies like this, where I've got a probability that that 470 strike that I'm selling in the strategy is going to be out of the money of about 70%. So you've got the higher probability of success. You can profit if the stock goes down, stays where it is, or even goes in the wrong direction higher. But as long as it remains below that break even of 474.50 over the next 2.5 weeks, you can be profitable in this high probability trade.
All right. Thank you so much for that example trade there on Tesla, Tom. That's Tom White, co-host of Fast Market.